walk me through the journey of Lambda School and the highs and the lows. And
We were a hot company in Silicon Valley, and then we were a company that everybody thought had died. Almost 10 years later, we'd raised 130 million and spent all of it. It was a big up, very big down.
And so now we're in third phase of the company.
Yeah, so
Walk us through that.
we started teaching this AI course. That first year, we did more than 15 million in revenue.
Austin, welcome to the show officially, I guess. 10 minutes rolling now. We've been jamming, but
Yeah.
welcome to the show.
Thanks for having me.
We've both worked in education adjacent sort of industries.
Mhm.
And, I think this is going to be interesting dialogue on what doesn't work with education, why it's so hard to make certain things
I was going to
work.
say almost everything.
I know. It's like
Yeah.
99.9%.
Yeah.
And then what are the opportunities out there,
Yeah.
right? I think we'll jam on that. But since we were talking about distribution and media and right before and your Twitter audience, right? And do you monetize that? Do you not monetize that? How do you go about it? Well, why don't you talk about how did you build that Twitter account, which is 400K followers now?
Yeah. 400 and change. Yeah. I keep
Any advice for the posters, aspiring
Yeah.
posters?
Well, I mean, so there are a few factors there. One is it's changed over time, right? The algorithm used to be much more follower driven. Now I think you don't like the number of followers probably matters less. Like I think it makes you slightly more likely to end up in people's feeds.
Right.
But probably worse for me and better for other people on X. The piece of content, each tweet is like its own little entity that goes out and will grow or shrink or whatever else. Um, just because the way they're treating the algorithm, they're going more toward the TikTok-y,
Mhm.
we want to amplify the best content, not necessarily,
Right.
this is the place for you to follow your friends or people that you've.
That wasn't the case before, though.
No, it's very different.
Yeah.
And to the extent that sometimes I'm like, oh man, I need to go look that guy up because I haven't, for some reason his posts just don't hit, and but I still want to hear from him, so I'll have to switch over to the following from the For You. But I don't think the power of defaults is big, and I think most people don't do that, so it's just the For You page. But um, when I got started, it was a bad habit that became a strategic advantage. Is the honest reality. Um, when we got into IC, I had 20,000 followers. So it wasn't
Oh, you already had 20K.
yeah.
What inspired building out a Twitter audience? And what year was this? Because that context is probably important.
It's 2015. Yeah, long enough ago.
So we're a decade into Twitter.
Yeah.
Okay.
Yeah. I think I had my first account since 2008, but I didn't never really logged in. I really started using it in 2012, 2013.
Oh, I see.
But originally it was just I I mean, so it kind of went strategic and then happenstance, then back to strategic, because in the early days, I'd spent a lot of my time in marketing and advertising and stuff like that. I was like, man, I hate that I can build stuff, but for 99.9% of people, nobody cares. Nobody's going to see it. How do I bootstrap having a little bit of a network so that if I build something, people will care?
Right.
And back in the early days, it was, nobody knew who I was. And so my goal was just to interact with as many people as possible. And I kind of so I viewed it the way a, marketer would. I was like, okay, what does your account page is basically a landing page. So make that as good as you can to get people to follow you.
Mhm.
And then the other important metric is just the number of touch points. So
Yeah.
whether you're liking or replying but importantly, the quality of the touch point is everything.
Mm.
The AI replies I get now are so freaking
Oh
annoying.
my God. Yeah.
And it doesn't even work. So yeah. But it was just, and then as far as what I post, it just became whatever I see or think about in real time. And the best content I post is just when I'm reading something or thinking about it, and I just share what I'm reading or thinking about.
Right.
And so that's actually it doesn't come off as strategic or scripted or like intentional. Um, and that's why I think it works so well.
Mm,
Like if you're, I don't have like a calendar, there's nobody else that posts for me.
right.
Every once in a while, the marketing team will be like, "Hey, we're running low on X. Can you like, pump that up? Or if we're throwing an event, yeah, I can fill a room." And that's, a huge advantage now. But yeah, it started out just, I wanted to have enough influence that if I ever built a product, I could share it with people. And then when we got into YC, so my advisors were, I'm forgetting their names. So, anyways, gosh,
It's okay. It's been a while,
yeah, it has been a while.
and it's been a lot has happened. I guess since
Yeah,
then.
yeah. Jeff Ralston and Daniel Gross.
Right.
Jeez. So they're like, okay, like you tweet a lot, like you should calm down and like not tweet while you're in YC, like focus.
Right.
I was like, yeah, that's really good advice. I'm not gonna tweet at all. And then about halfway through YC, we were about to launch a new course and we needed to hire some people. So I put out a couple of tweets, one about each of those things. And the new course that we built all of a sudden had 10,000 people sign up. And
Oh
then
wow.
our new hiring, hey, we need to hire somebody for X had like 1,000 applicants. I was like, okay, like this is actually pretty valuable. Like
Yeah.
getting all that stuff without using Twitter,
So
which
your
is,
original thesis was correct.
yeah, it
Yeah.
was
So it
100%
was
correct.
like, yeah, build a following. So I had Mike Solana who runs Pirate
Mhm.
Bars on the pod, and like
It's great.
yeah, he also argues that the network comes first before you build the thing.
Hmm.
And there's this other philosophy out there that you build a thing and the network emerges. I don't think so. I think like you
I mean, I think you can. Like, there are definitely people who, are not well connected that build stuff. What surprised me was like, so once I was in YC, um, I'd done some stuff before that. Like people in Utah, some people knew who I was, and like I had a few friends in Silicon Valley, but I was still, ostensibly a nobody. Um, what really shocked me is how quickly once we were working on something that people found interesting, like how many people just came out of the woodwork and like all of a sudden anybody you want to meet, you can totally meet. So I
right.
think there is a little bit of like an ebb and flow or a yin and a yang of those things of like the more impressive of a thing that you're building, the easier it is to have a network. And the bigger your network, the easier it is to build more impressive things.
I
So I think
I
they can come together to some extent.
I would disagree because I think like we don't get to see the graveyard of impressive products that don't survive because of the lack of network. And the ones that emerge are the ones where naturally, people were
Yeah, but I mean,
were able either had the network or were able to build those
I hear you.
networks.
And look, I get that like if you just build a better mousetrap and you don't tell anybody about it, like y- I'm sure that happens sometimes, but it's not that hard to like email a few people. Like I was blown away at how easy it was to
Right.
network in Silicon Valley and
Right.
like not even trying to network, just like I mean, the number of and this was like before I was at any level of influence that
Right.
mattered, like
No, cold emails have a very different response ratio in New York and DC.
for sure.
Yeah.
And
So
it,
I agree.
and
Yeah.
people emailing
Yeah.
you, like
Right.
literally I was just going about my day and like our series A happened because Patrick Collison sent me a DM and was like, let's do lunch.
Well,
And I was like, oh my gosh, it's Patrick Collison. And then I go have lunch with him and he's like, hey, let's find a way that I can invest because I love what you're doing. And then before you know it, I'm over at his house. I'm meeting like and that's just one example, right? There
right.
were so many different um like Mark Andreessen followed me on Twitter and I just like DM'd him like, "Hey, I would love to meet sometime." He's like, "Yeah, absolutely."
Hmm.
And there are hundreds of examples like that.
Right.
Um, it took me a while to meet, Paul Graham and meet some other folks, but they're all
Even after going through YC?
yeah. So
Oh,
when I was in
interesting.
YC, PG was living in London
Oh,
or
right.
in
Correct.
um England
Right, and
already,
Sam was running
and
YC at
Sam
the
was
time.
running
Right.
YC.
Okay.
And I met like Sam. Like, YC was big enough that it's not like you, like, sat down with Sam all the time. Like, I
Right.
kinda knew who he was, but I didn't really meet him
Right.
in a material way until after YC either. Um, Yeah, I mean, PG was like an active fan of me on Twitter, sharing stuff about me before I'd ever met him.
Right.
Eventually, I was like, "Hey, I need to like." A friend messaged me and was like, "Hey, I just met up with PG. He's in town. Like, why don't you message him and see if he's in if
Right.
you want to meet up?" And I messaged him and he's like, "Oh my gosh, like yeah, come over." And yeah, I just blew up my schedule that day and ended up spending like the whole day with PG until he had to fly out. And
That's incredible.
um yeah, I'm a huge PG fan still.
Right.
He's yeah.
What are like the 3 biggest things you've learned from him, I guess, like since you've known him?
Um I mean there are individual like inflection points, but I think the biggest thing about PG is just the simplicity of the way of thinking. So we were going through like really crazy complex stuff, and he just brings it back down to earth so fast of just like, why don't you just X? And there are a lot of people that like, I've got investors who are like, why don't you just generate more revenue? And you're like, yeah, I could have told you that was the plan.
Yeah.
Um, but he was pretty, I mean, we talked a lot about the similarities between what I'm doing and what YC does. And different ways that he structures things, how he looks for exceptional people. Um, yeah, it just and I think the most important thing for me about PG is like there are there were we were a hot company in Silicon Valley, and then we were a company that everybody thought had died. I think
Mm.
some people still literally think that we died and don't
Right.
realize that we changed what we do and we're still around and surviving. But PG is one of the very, very few people in Silicon Valley who treats you exactly the same way in
Mm.
both of those instances.
Mm.
When you're getting really big, he's not like there's definitely no celebrity worship.
Yeah.
He knows slash is one of the bigger celebrities, and it's just, hey, how well are you doing? What are your customers saying? What can we do next? And then when you're at the lowest of low times, it's like, hey, how are you doing? What can we do next? How are customers feeling? Like still the same
It's the
stuff.
same stuff, yeah.
Yeah. And very basic, um but I think it's important that he didn't change.
Mm.
Very even keel. And I think for him and for some other critical investors, like very few founders get to see like what it's like at like the peak of the hype cycle. And it's surreal. And very few founders get to see what it's like to go from, one extreme to the other. People treat you so differently in
Oh,
Silicon
yeah.
Valley.
Yeah,
Like it's crazy. I mean, yeah, I think people would not believe how crazy it is at the peak,
right.
and people would not believe how crazy it is in the lows. Um, and when you're in the lows, most people, because of their incentives, they've moved on.
Mm.
Like you're not the obvious 10x
It's
return of
not
their
personal, but
fund.
it's just like relevancy, and we were
Exactly.
talking about this at breakfast,
Yeah.
like, of what, like, the new Silicon Valley now looks like is there's is, it's like it has some characteristics of the original, gold rush in San Francisco where people come from all over and, in these hype cycles and
Yeah, and I get it.
yeah.
Like if you're a VC fund and you think that this company is going to return your fund, all the time and effort and energy, and I mean, to the extent that like I don't think people understand the number of gifts that you get, or like the people that are just trying to convince you to meet with them
Mm.
every single day at the office. There would be something. It was crazy.
Oh, wow.
Um, and then when that goes away, like it's not that they don't care about you or
Right,
they've forgotten about you. I mean, sometimes that's true, but
right,
they're just focused on how can I return my fund,
right,
and they're going to focus on whoever is the most likely to do that at any given time.
right.
So, um, totally rational, but for a few people like PG, interestingly enough, the three people who have like supported me the most through thick and thin are PG and Sean McGuire, and they kind of hate each other. Um, and Steve Oskowitz from GigaFund.
Oh,
They're
interesting. Is Sean, an investor through Sequoia or personal?
he led our Series A when he was at GV.
Oh,
Um,
okay, cool.
yeah, and he so Stripe wanted to invest in us, but I
Yeah,
didn't know what to do with that because it was kind of a weird
right,
thing. Um, and so Patrick was like, "Okay, well, let my friend Sean, who's at GV, like you can let him lead the round, and then we'll participate." And so it became a thing. But yeah, PG and Sean, who kind of hate each other, and then Steve have been my three closest,
right.
longest, most diehard.
Right.
Yeah,
And Steve's another Austin native. So
yeah,
yeah,
yeah. Steve was very happy when I moved to Austin.
I'm sure he was.
He was pushing that quite literally for a decade before it actually happened.
Uh,
And I think he's one of the reasons that uh it's one of the reasons that Luke Nosek is here, and one of the reasons that Elon's here, and one of the he was
right.
a
Oh yeah,
big
he's been
he's been
pushing.
here forever.
Yeah, yeah, yeah.
Way before it was cool. Yeah.
He came here like I think he told me he came here like 20 years ago or something.
Yeah.
So yeah,
Yeah.
yeah,
Like dropped out of Stanford to move to Austin
yeah,
in like the 80s, 90s? I don't know, a long time ago.
yeah. No,
It was
not 80s. Okay.
I'm aging him way too much by saying the 80s.
No,
Sorry,
but
sorry, Steve.
I think late 2000s or something.
Yeah.
Yeah.
It was before my time.
um, in what way were Steve and Sean helpful throughout these times? Like, what what was a piece of advice that stands out, or something that you've learned from them? Eh,
So Sean went to bat for us time and time again, and for he paved a lot of networks for me.
Mm,
Um, so, every VC is connected to everybody else.
right.
But Sean actually went out of his way to make sure I met the handful of people that he thought were most influential and consequential. And like he he made those happen, not just like, hey, introing you guys, but like we would, meet up together or with like it. So
That is like putting your full weight of your reputation and yeah,
yeah. And like
right,
when Sean believes something, he believes it with his whole chest and
right,
he acts accordingly. Um and I'd say that's true of all three of those. Like um
right.
and
When they have conviction, they're all in.
yes, and importantly, they are 0% influenced by what anybody else thinks.
External narrative,
It
right.
is purely like they do the analysis, they come to a conclusion by themselves. Not they're if the facts change, they'll change what they think, but they're not arriving there by relying on the opinions of other people ever.
Mm,
Like sometimes annoyingly so. Like, you know, if they don't see eye to eye with somebody, there's not just like okay, just like smooth it over and go along. Like they'll say I disagree and commit, but you can't get them to like or say like, okay, yeah, I can see it your way. If they don't, like it's just no, why would you like I think that's probably the number one criteria of someone who will make a great investor.
mm,
Um and yeah, all three of them act that way. Um I don't I know that the question wasn't like who are the mentors that helped you out the most, but that's those three for sure.
right. It um so how we started this conversation was how this is like so sort of self-fulfilling. uh the network did help you, right? Like you having that, like building that Twitter following, getting that audience, and then
Mhm.
that helping you with the business once, even though the advice was to the contrary, was to stop tweeting and focus. And maybe for that time focus was important, but once you came out, that helped you with the first cohort at Lambda School,
I can't even
right?
imagine trying to do what I do now without that network.
Yeah.
Yeah.
and and then you got to start meeting all these people, and so having that network in place, like, absolutely, right?
Yeah.
Yeah,
Yeah.
helps. um well, interesting. So, well, you walk me through the journey of Lambda School, and the highs and the lows, and
Oh, jeez.
what,
Um, I honestly forget some of it, but it was, so I guess I was working at a YC company called I'll give you the very short backstory. So I grew up in a Mormon family in Utah, very traditional Mormon family. Um, I knew I wanted to do something on the internet and I knew I wanted to start a company, but in my mind, those were like totally separate things that could never like do anything together. It was either you'd start a company or you'd play around on like with technology. I had no idea that there was a thing like Silicon Valley where you could do both. Um, Honestly, really until so I graduated from high school in small town, normal public school. I was a good Mormon boy, so I went on mission. I ended up serving in Eastern Ukraine. So I speak Russian fluently,
Wow.
which is fun. That was before anybody knew what Ukraine was
Right.
either. Very different Ukraine. I think technically half of what I where I lived is still Ukraine. Half of it is technically right now the Donetsk People's Republic, depending on who you ask. And obviously Russia
Mm.
is all in their business. So we'll see how that shakes out. But um, went back to BYU. I'll fast forward a little bit. So again, good Mormon boy. I'm going to BYU, 10 miles from home. Was bored out of my mind. And then I was, one of my mission buddies was my roommate at BYU. Um, and he could tell that I was really frustrated in college, just not, I wasn't getting anything out of it that I wanted to get out of it. And it felt like another 3 years of college felt like you were saying another 50 years of college to me at the time. It's just like an insurmountable, like, I can't handle this, um, type of thing. And so he was like, "What do you actually want to do?" And I was like, "I don't know. I wanna just go to Silicon Valley," which I had learned about in the interim. Like, when I realized that there was a place where you could work on technology and you could start a business, and I heard about Silicon Valley, I was like, that's where I need to be. I don't know how, but I need to get there. I found a blog post of some guy who lived in a two-door Honda Civic while he taught himself enough design that he could go start working at a Silicon Valley startup.
Mm.
Um, and I think I found it on Hacker News or something. And I had the exact same year model of car as him.
Mm.
And so I was like, well, if he can figure it out in a two-door Honda Civic,
I can
in
do.
my two-door Honda Civic, maybe I should just go out there. So I did. Drove out there. I didn't like, yeah, I had no skills, no resume, no anything, no network. But just kind of drove out there and started meeting people and building stuff, and eventually was working at a company. Still with the end goal of starting a company eventually, but in between there, I was engaged to my now wife when I was living in my car, which says a little about me and a lot about my wife. Um, and so, by the time I started Lambda School, I had a kid already.
Oh, wow.
I'd been married for a little bit. I was working at a company. And so we started just teaching people. So how far do we want to go back? So um when I was at working at that company, I had a few $1,000s worth of debt that I was just trying so hard to get rid of. And we're paying off $2,000 a month, and living in San Francisco, or in the Bay Area, so everything was super expensive. And I ended up saying, you know what, I've been working in a bunch of growth related roles. Why don't I take everything that I know and put it into a book and try to sell this book? Um, and so I did that along with a friend at the time. And, we priced it at the time what felt really high. And we were using all the growth tricks that were in the book to sell the book.
Right.
But the first day, the book made like $65,000.
Oh, wow.
And I was like, oh my gosh, this is,
Where'd you sell it? Like,
uh, so,
maybe that playbook's still relevant.
I mean, we had like the first 4 or 5 chapters done. One of them was about how to like grow a Twitter following.
There you go.
Yeah, I had like 10,000 followers at the time. But it
Right.
was like, hey, if you have no resources, how do you like grow your company without, just paying for ads? Like what are all the avenues that you can use?
Right.
And yeah, we put it on. I didn't have enough time to write the whole thing up front, so we finished, like, the first 3 chapters, and I would give away the first chapter, and then we sold the book for $40 a book.
Right.
I mean, it's the $40 for the ebook. If you wanted the physical book, it was, like, 150 or something stupid like that, because I had to go figure out how to get them printed. Um,
And this is what, 15 years ago or something?
yeah, some feels like forever ago. But that worked, and then I
Right.
was like, "Okay, like, why am I working so hard at this job? Why don't I just start writing more books?" Turns
Right.
out, because I don't have anything else to write about and I don't have any experience but another guy that I was working with was, an expert in this programming language called Haskell, which uses the Lambda calculus, and so I was like, "Why don't we write a book about Haskell or, create a course about Haskell and sell that?" And we did, and I'm pretty sure everybody who had ever written a line of Haskell bought the book. There's just not very many
Not
of those people.
that's when you
Yeah, we dominated in the Haskell
right.
community.
That's when you learn markets matter.
Both of them loved it. Yeah. No, I still love Haskell, um, but yeah, Haskell uses something called the Lambda calculus, so we called it Lambda School.
Oh,
Um,
I see.
and then I was like, okay, this Haskell stuff is cool, but like you said, the market's too small. Um, the reason the first book did so well is because we were helping people in a way that would help them make more money. Haskell's not realistically going to help you do that. What if we helped people write a little bit of JavaScript and get good enough? Can we build a course that will help people get their first job? Um, but again, had no time, no resources, no anything. So we started teaching free classes on learning to program and had thousands of people signing up for those. And they're like, all right, let's do we both had jobs. Let's launch a part-time learn to program, quasi code boot camp. But you have to stretch it out and, we're because it's just the two of us and we both have jobs, we don't have to charge very much for it. So let's charge $5,000 for this
And
boot
you're still
camp.
trying to pay off your debt or like
No, the debt was
yeah.
gone
Oh, then it's gone.
with the
Like the book
books.
still took
Yeah,
care of it.
yeah.
Okay.
The debt in retrospect was not very much. It would just weighed on me a lot.
I see.
Yeah, so then we were teaching people how to code, um, and it got to the point where my co-founder quit his job. I was still working, so I was just, terrified of not like even paying his salary. We were still stacking up cash in the bank. But because our audience came from teaching free classes, the vast majority of those people didn't have the means to just go to a code boot camp or do whatever. Um, so it was like lower income audience on average. And so all of them were like, I'm really interested in doing this, but I don't have $5,000 to pay you to learn to code. And I'm like, yeah, that makes sense. What if we did? And then one guy emailed me and said, what if I paid you like $1,000 up front, and then after I get a job, I pay you the rest? And I was like, okay, that's interesting. But
Mm.
even once you get a job, will you have enough money to pay for the rest? No, but what if
Is that a handshake agreement?
I wrote down a very basic contract.
Okay.
He's like, I'll just pay you a percentage of my income until I've, paid some amount, and I'll pay more than tuition because it's, there's time and there's risk involved and like whatever. And I was talking with my co-founder and I was like, look, we're cash flowing this company really well because it's just the two of us.
Right.
There's no compared to a normal code boot camp, we don't need any resources. We don't have staff. We don't have
Right.
buildings. We don't have, what if we emailed everybody and said, and we were frustrated that code boot camps were like really light on the stuff that we thought mattered, CS fundamentals.
Mm.
Um, so it's like, if I could wave a magic wand, I would just do something that's like at least 6 months in length. And we could probably get a couple people to pay us, a little more for that and cover all of our costs.
Right.
And then we could do something that's free until you're hired for everybody else. So I sent out an email to the few thousand people we had on our free teaching list and said like, hey, are any of you 2,000 people interested in something where we teach you everything and it's completely free and you pay us back if you get hired? And like 200 people, they're like, yeah, I'm in. We're like, okay, like, this is different now.
Right.
Um, and then we're still cash flowing everything for a while. Up until we applied to YC, we were like, I
Oh,
still,
wow. So you were like already cash flow
yeah, we'd
positive and
probably done. I mean, we applied to YC with like $150,000 in the bank. that we had bootstrapped in the past 3 months by ourselves,
Wow.
um, which we thought was cool. At YC scale, they're like, "Okay, cool, whatever." But we're gonna do it with or without YC. The big thing that YC let us do was make the classes a little bit bigger without having to find as many people to pay up front, and let me
Did you start doing scholarships or something?
no, we started using income share agreements.
Right.
So we pretty much converted everything to income share agreements.
Mm.
And originally we had to find like the number of income share agreements we could give out were bottlenecked by how many people were paying upfront tuition. So we ended up spending 90% of our time getting a couple people to pay upfront. And then we could, had a long waiting list of
What
people.
did that distribution look like in a class of, let's say, 100? How many did you need to pay up front for, like, the model to work?
Well, when it was just me and my friend, or my co-founder, one or two, you know,
Right.
um, as you start to
In a batch of
scale.
100, only 2, right.
Yeah.
Okay.
I mean, because
What was the tuition? This is online, right? Completely
yeah,
online
so we
bootcamp?
said it was $20,000 for a 6 to 9 month, curriculum. Um,
Oh, wow.
and then we would do a full-time class during the day and then a part-time class at night. And so, and we would have 2 or 3 concurrent cohorts.
Who's
So
teaching these classes?
my co-founder and I. I mean,
Oh,
we had no resources,
okay.
no people.
Yeah, you
Yeah.
guys are teaching the classes, you guys are running the recruitment
Yeah, it
ops
was a
and
it was a true startup.
okay, and
Yeah, so I spent most of my time on like the logistics and operations and marketing and sales, and
right,
he would, I would
build the
teach some of
curriculum,
the classes, but he's a better teacher than I will ever be.
right.
Um, and yeah, so it was just the two of us. And the normal advice you're given in YC is like don't scale people because you don't have time to like go hire and figure all that out. So I was like, all right, we're gonna like spread these classes out enough that it's just me and Ben is his name. And so like during demo day, he was in a back room teaching while I was like, yeah, well, like he,
Classic,
yeah. So it's just we'd hired a couple people by that point, but
right.
for a long time it was just us.
And back then, YC also wasn't doing 500K checks, right? So it,
Yeah, that's right.
right?
I can't
Yeah.
even. No, I think they did.
It was like probably 120K
That's something I
standard deal.
should be able to remember. Yeah, it was probably 120K still.
Yeah.
I would known if it was 500.
Yeah,
Yeah.
yeah, yeah. No, 500K is very recent development.
Yeah, yeah.
Yeah.
But yeah, we raised 4 million after that, and it was all a
That is a good amount of money. At least 2015. That's a great
yeah,
round.
yeah,
Yeah.
yeah. 2017. It
Or
was
2017. Okay.
yeah. We were. I mean, I think we were. uh, I thought that we were one of the better companies or most well accepted in the batch. Now I talked to some company and they have like a like system and we had like 50 likes and a lot of investors to meet with. But now I go talk to other people and they're like, oh yeah, we had 700 likes. And you're like, oh, I didn't know that was possible. I thought we were doing pretty good. But uh yeah, we raised at a relative at a valuation that people were like frustrated was high at the time. We raised at $16 million
Mm,
uh, cap on our safe, and people were like offended at that.
mm.
Now you never see a company that low, but markets have shifted. So yeah, it was fun.
There also probably wasn't a single $1 trillion company when you were starting.
That's
And
probably
now
true. Yeah,
we're staring at the first $2 trillion IPO.
yeah,
So,
yeah,
yeah, fair to say things have shifted both in the
yeah.
private and
There's
public
also
markets.
inflation, I guess.
There's
So
also inflation. That's true.
yeah,
Inflation adjusted valuations of
yeah.
market cap.
2017 dollars. It felt like
No, I
yeah,
remember when I first started coming. Actually, it was 2017 when I first started coming to the US, and oh, there's a 3x difference.
yeah, yeah.
Just if I
That's
convert Pakistani
crazy.
rupee, there's like a
Yeah,
3x
yeah,
difference.
yeah.
So yeah, there's 100% inflation.
And I remember talking to one of our mentors and investors who he was actually the first investor to commit. I met him before YC. Um and I was like, yeah, we're trying to figure out if we should bootstrap this thing or if we should raise. He was like, okay, well, if you're gonna raise, like you're gonna wave magic wand, how much would you raise? What would that do to the company? I was like, I would raise like maybe 100, maybe $200,000, and that would like 5x our velocity. And he was like, that was the way my mind, that's my mindset at the time. I couldn't
Yeah,
even imagine.
You're
some
bootstrapping. You're
random
like,
person giving you $200,000, you know?
yeah.
Uh, Almost 10 years later, we raised 130 million and spent all of it. And we're still here, but it was a journey. Now we're profitable. It's okay. We're good.
Through, through a whole
It
through a
was
whole
a
journey.
it was a big up, very big down. And only recently did we kind of turn it into a real business. Um, but
What
yeah.
were the cases against the model? Because education isn't a widely funded uh sector for venture capital.
Mhm.
And I'm sure like amongst all the support you got, and in a way like YC would probably understand education better because they made that model. Like they
I mean, so it's interesting. Our YC interview, normally you do like a single interview and then they accept or they reject you that night and they call you. We did our interview and then we drove into Mountain View, like, let's go get pizza. Like, that was so stressful. Let's go relax. And I got a call and they're like, hey, this is YC. Like, can you come back? We want to like interview you one more time. Cause we're like,
mm,
you're on the bubble, you know?
huh,
They're like, oh man. And because we were already at the point where we're going to start the company with or without YC, it didn't really matter. But, you still would prefer to,
right.
like, honestly, I was honored to be invited to,
Interview.
interview.
Yeah, yeah, yeah.
Um,
You consider that event. You're like, this is
yeah,
great.
I
Yeah.
was like, "Oh, we
Yeah.
made it," somebody thinks we're
Yeah. We're in
semi-legitimate, I
yeah.
guess.
We're in some short list. We'll eventually make it.
Yeah, um, and so we went back, we'd paid for our pizza, and I was, like, so stressed out, I was like, "Let's just leave," and so we didn't even get the pizza, we just got in our car and drove back to YC, um, and then we waited for a little while, and then we had another interview. They're like, "Okay, normally we, like, call you at night, but we're since you guys came back for a second interview, like, just go wait out on those couches, we'll discuss it amongst ourselves, then we'll come and, like, tell you face to face
Mm,
whether you're in or not." I'm like, "Okay, great." Um, so we waited out there, like, half an hour later, they came back out, and they're like, "We're still on the bubble, like, can you come in and do another interview?" And I was like,
right.
Does this ever happen?" They're like, "No, this has never happened before."
Right.
And so we did another interview, and I mean, they were poking us on all the right things, like, "Look, you guys have this unique business model, and you think that that business model causes you to operate differently, and it would be." Our pitch was code boot camps won't be able to easily switch to this business model because as soon as you are offering zero upfront, virtually everybody takes the zero upfront, and now you don't have operating income,
Mhm.
and it crushes everything. Which was right. Um, we did underestimate the number of code boot camps that would be willing to crush all of their revenue and then just die. It tended to be the thing that actually happened. Is they saw us doing that, everybody freaked out, and then everybody just killed each other. Um, but so after that, we went out and they're like, okay, one more interview. So I think we had 5 YC interviews that
Oh
day.
wow.
I've
Okay.
never talked to anybody who's had two.
Wow.
So we were that like much on the cusp of the bubble, I guess.
What eventually did you ever find out what eventually like pushed you over?
I think it was just that they're like, okay, this is like the main question everybody had. It was like, how is this different than Hack Reactor? How is this different than Flatiron? Why don't other people copy this? And we are like, no, you view the world very differently when people are paying you tuition versus when you're investing in people via education. That it works really well if you're online. If you have
Yeah.
physical locations, it starts to break down. It's hard to scale physical locations. We're online entirely, so we can scale more
And it
easily.
was being done for sports and Hollywood, but it just wasn't being done for vocation.
Yeah, pretty much.
Yeah.
Um, and yeah, so I think it was just interesting enough to be worth a shot.
Mhm.
And by the end of YC, we figured out how to work with uh, finance teams on Wall Street and borrow against the ISAs in a non-recourse way, so we could effectively we could cash flow the whole company
Right.
a lot more simply.
How did you develop that insight that can be totally a financial product that, you could capitalize?
I mean, so before I started, I was at a lending company, so I spent a ton of time
I see.
talking to the asset management teams and the people who were going out and raising capital to lend, and I understood how they thought about it. And I was on the growth engineering team there, so we were focused on like what does the cohort look like, so that was the world that I was living in was, a little bit of marketing, a lot of risk management. And so when I saw like this, it's like, okay, like what's the risk management profile of this? What does that look like? Okay, if we, can convincingly say that this cohort of students will eventually be worth X, can we go find somebody to finance some portion of that X and then use that as our operating cost? 'Cause that's what you have to do with a loan. So you have to give people money. Um, the difference here was, we're not like giving people money, we're giving them education that we have to pay for. Um, but that was tricky because there's little enough data and it's risky enough from a regulatory standpoint and from a return standpoint that you get crushed. Like the people that, invested in our ISAs made a fortune. Their IRRs were crazy high, because they're the only people willing to touch that weird new market. Um, and they're a little bit sharky too, but um, yeah, we made it work.
Oh, they're on Wall Street for a reason.
And they're in alternative assets in Wall Street
Yeah.
for that reason. Like it's the Wild West, and that's where you can like we would
How does that work? Do you like go pitch to these alternative asset teams that hey, this can be an alternative asset, and
y-
so what's the exit? Like, what does the exit for them look like? How do they make money from
yeah.
this?
So similar to the story we've told before, found a guy who'd been doing alternative assets his entire career. Um, he was he was proud of the fact that he had created credit default swaps, and I was like, yeah, that kind of caused the 2008 crisis. He's like, yeah, but like that's because people did bad stuff with it. Like it was an awesome product that you could, put all these mortgages together and like have a lower risk. The problem was the underwriting of everything, but it was an awesome product. It's like, okay, whatever. But literally, I mean, it's literally you walk around Wall Street, like obviously not literal Wall Street, but you're in New York talking to there are all these asset management firms. Um, and I would be, you go in and you pitch them on this opportunity and you give them a data room. It's like raising money for a startup. Um, and the only reason I had a prayer of doing all that is because of the guy that we were working with. Again, very sharky to be totally honest. Not not a person I would want to work with in long term in retrospect. But you would like walk in the room with him and everyone's like, "Ooh, he's here again. Let's figure out how we're gonna make money."
Mm,
So for them, you're talking to credit lenders who they make like their scorecard is just the IRR that they drive. So they're gonna lose money in some instances, they're gonna make money in other instances. And the question for them is what's the net return across everything that you have created? So, for us, they were targeting like a 30% IRR. And if we were wrong, they were gonna make a 17% IRR. But they structured things in such a way that they were damn sure gonna get paid.
mm,
And we had to take on a lot of the risk, um, almost all of the risk ourselves still. Um, but it let us, effectively borrow cash against this asset that didn't exist before. Um, so that was like it's extremely complex. I mean,
so you almost
yeah,
like okay, let me try to like
we created a new financial asset is basically what happened,
yeah, 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 yeah.
and then we created a market for the new financial asset. Um,
So very interesting. Let me try to like work this out
yeah.
in terms of what it looks like maybe in a batch. You have 100 people coming.
Mhm.
Um, let's say only 10 of them pay you tuition or 20 of them pay you tuition, and
I mean, it was effectively zero. So just say
okay.
zero people paid
So
upfront.
let's say 0 people are paying you upfront. Um, and these all of these now come in on income share agreements, right?
Mhm.
And there's a similar power law in all cohorts, as I know to having managed many of these cohorts is the same power law that plays out in venture capital, any other thing. The top 10 are going to outperform
Not really
probably.
for us, because we had to, well, we didn't have to. In retrospect, it may have been a mistake, but we thought that people would freak out if they end up paying us. I mean, we had people that, a couple years later, they're making $300,000 a year
Right.
and they were making minimum wage before. Like, what's the right amount to charge them? Because they had to like send us a check every month. We're like, okay, we're going to cap it. So the maximum you can ever pay us is $30,000,
Oh,
which may have been a
okay.
mistake, honestly.
Right.
But we were trying to be like, look, we're not, because you could.
Was it to build trust? What was
Yeah,
that?
it
Yeah, yeah,
to everybody was so skeptical about
yeah,
everything, and fairly so, that we're
yeah.
like, "Let's eliminate the skepticism just
Right.
with
So it was a
we'll
trust.
set a max."
Right.
Later on, regulators said, "Okay, the max is what everybody pays, so we're going to treat anything between your cost of training and the max of what someone could theoretically pay as, like, what is expected for them to pay, and the difference between those is interest," which makes no sense whatsoever. But that's another
We're
story
going
for
to that.
another time.
We're going to get
Yeah,
to that story, but like
yeah,
right now, just like framing the product. No, I think you're right. Like, okay, so that changes things. If you're capping the upside, then the power law doesn't really matter because you could only make so much from it.
right.
And then you're basically,
So our entire
yeah,
job
right.
is to
It
train
can have
pe
a consistent
train people
index.
for original a
Right.
reasonable price,
Yeah.
and then to make sure as many of them are making as much as we
Right.
can on the other side.
Right. So that changes the incentives on your end too. Like it would make way more sense if 70% of like 70 people in that particular batch end up making 200K in 2 years.
Mhm.
Right. Like it,
So we needed the big thing for us was the, like, binary, do you get hired or not?
mm,
Because you wouldn't pay us anything unless you made more than 50,000 a year. Again, this is, inflation adjusted, it would probably
right.
be 75 today or something like
Right.
that. And only if you got a job in the field that we trained you for, which was another thing that we did because we wanted it to feel good to like, we didn't want to, if you're driving Uber and making six figures driving Uber, we don't want a percentage of that.
Right.
But people, would try to abuse that and be like, oh, I'm a web developer, not a software engineer. Like, I'm not going to pay you. Like, that sucked. Um,
Interesting.
but yeah, we tried to make it
Right.
as student friendly as humanly possible
Right.
and to align our incentives as much as we possibly could. And our actions reflected that. And I think the vast majority of students felt and noticed that. Um, and, we don't do anything like that model today, but there's still probably 5,000, 6,000 engineers who are engineers because of that today, who would not have been engineers
Oh wow.
without it. So,
And in software
yeah,
particularly, right? Yeah.
correct.
How many people went through all these different batches?
8 or 9,000
8 or 9,000.
total.
Wow. That's a pretty big amount. Um, okay. So coming back to like structuring this financial model. Okay. So let's say 70 of these people end up,
Mhm. So say
or,
they're successful, right?
so let's just say they get a job, they're successful, right?
Mhm.
Um, how does that financial product get valued?
Yeah. So, I mean, it's all
What
it's
is
all
that?
just math. So they're gonna start making payments, and over the course of 2 to 4 years, they're going to pay us an average of $25,000 per person.
Okay.
Um, so across the cohort,
Over like 2 to 3 years, is that the usual
so our
cycle?
we 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 changed the model at different times. The original one was 17% of income for 2 years, capped at 30K. Later, the 17% for the people that, like, made the jump, it started to feel like a lot for the first little bit, so we made it 10% for 4 years, which was way worse for us, even though it felt the same for the students,
Right.
because the time value of our money was
Yeah.
we're paying a high IRR to borrow it,
Right.
um, but students didn't know that. They were just like, "Oh, you know, I paid $25,000." They didn't realize that you paying me $25,000 over the course of 3.5 years, the real time value of that when we train you is probably half that, you know?
Mm,
So yeah, basically you do all the math and you figure out what a cohort will be worth, and then you assign an IRR that people hope to earn, and then you would add, you deduct more for risk adjustment and whatever. Um, so there was a time when, we would get an advance of $4 or $5,000 a student. And then once we cleared an IRR threshold, then we would get the rest of it, or we would get 65% of it. So it all just,
so the loan was so every batch you would say would have like these were wait.
So we
Was this like continuous enrollment or was it
so
batch
we
based
yeah, we
or
had a new cohort every month,
okay.
and we had different tracks and different but we would generally bundle up the ISAs into about 1,000 at a time,
Mm.
and then
And then
act
you're pricing that particular 1,000
Yep,
people cohort.
yep, and you're just looking at,
Right.
like I mean, you're looking at the performance of other cohorts to try to approximate where it might be, but the IRR was so high and like, so let's say you think this batch will be worth $1 million 5 years from now. Okay, well, I'm going to make 15% guaranteed on that. So now it's worth 600,000 and I'm going to adjust for risk. So I'm going to pay you 400,000 for it. So it would work kind of like
Mm.
that. So you're getting kicked in the teeth the whole time, but you're just trying to make this financial model valuable enough. Um, that you can make it all work. And as you get more data, the prices edge up over
And
time.
you're
But
continuing to borrow against each 1,000 people cohort, I'm
Mhm,
guessing, right? Yeah.
mhm.
Interesting.
And the deal changed. It was incredibly complex. Our finance team was like 20 people. And we're not even getting to like how does the accounting for that work when it comes to gap? No one knows. Because normally with a loan, there's like a par value, and then there's an interest rate, and then there's a default rate, and you plug in those three numbers, and you can,
Right.
But it's like, what is this ISA worth? Either $30,000 in 2 years, or zero ever,
Mm.
or normally. And how fast will it be repaid? Well, it depends on if you're going to get a raise in 6 months, or. So it was extremely complex.
Right.
But yeah,
Yeah, but then I guess I'm guessing the more people went through these programs, the more data you had, there was more predictability getting built into the model or
yes and
no.
no. I mean, the problem is building data sets like that, the lenders who are used to lending against non-traditional assets, they're like, okay, what's your 10-year payment history? You're like, I've got like 3 months. How does that,
Yeah.
So by the end we had like 2 or 3 years worth, but
Yeah. Right. So it's payment history is all that matters and everything else is a gamble anyway.
yeah,
And their risk is just
they're just doing math.
yeah, yeah, right.
They're saying, here's my risk tolerance for this product that I
Yeah.
base on
They're not
whatever.
looking at arbitrary factors. That's your problem. You figure it out.
Pretty much, yeah.
Yeah. I
Yeah.
see. Yeah.
And they print money reliably. I
Right.
mean, they are, as far as like dollar for dollar return,
Right.
those alternative asset lenders return a higher percentage than anybody else on the planet.
Did you ever consider just starting your own lending firm, alternative asset lending?
Um, yes.
I mean,
Uh,
complete vertical integration, you know?
we were very close to getting there. And then regulators started saying, "Hey, this is actually a loan. Um, so you're not licensed to be a lender." And we were like, the regulatory world started like forming around this new instrument,
Mm.
which is what eventually killed it. Um, uh,
And the
yeah,
company almost. So like let's talk about that. Wait,
yeah.
what happened to the main business model was income share agreements,
Mhm.
IFAs. Like the new financial product you worked with alternative asset managers in Wall Street
That was just
was
trying to
this, right?
fast forward money from the ISAs. That's all it was. And a
Right.
very expensive fast forward, so we didn't have to use venture capital for everything.
Right.
Um, and that was working. We were getting
And so now
like
this is like you're 2 years into this business. It's 2019.
mhm, yep. Um,
Okay.
and then so in I think it was I can't remember what year exactly, but along the way we're lobbying on Capitol Hill trying to get regulatory certainty for this stuff created. Because we kind of kickstarted the market, but we were not the only like ISA. There are a dozen boot camps that used
Yeah.
ISAs, University of Utah and Purdue, and like all these traditional for profit
Interesting.
or nonprofit universities started using ISAs. The terms were obviously different, but it was an entire industry.
Right.
Um, and we were the poster child for it for sure.
Mm.
Um, so we were on Capitol Hill trying to say, "Hey, just tell us how you're going to regulate this." Like at the time, everybody on Capitol Hill was really mad about Uber.
Mm,
So like these tech bros just think that they can go do whatever they want and they'll get enough customers that when we try to regulate them, they can fight us and like they can win. So that was the kind of cultural that was like the all
right,
regulators wanted was to figure out
right.
who the next Uber was, and they would constantly put us in the same like, "Oh, you're doing exactly what
And
Uber
leading
did."
up to it, it was probably the same time. Did Andrew also sue the government around the same time?
They're after that.
Right.
Um, yeah, the big stories were like yeah, it was mostly Uber. So we'd go on Capitol Hill and say, "Look, we'll comply with regulations. Tell us what it is, because a, a big factor of like um the lenders that we were borrowing from, it would take massive discount because it was in the legal gray area. And they're like, yeah, look, if we could get laws passed that would say this is how we're going to treat this stuff, the dollar amount that we could get per ISA would almost double.
Mm,
So we're like, please just regulate us somehow. And Trump had just won the election and nobody cared about anything other than Trump. Like that was when everyone was trying to impeach Trump. And we're like, just put something in, the next funding bill or the next student loan bill or whatever. And so we were working, the House and the Senate with really expensive lobbyists, just trying to like get like just clarity.
mm,
We went to the CFPB and said, please give us the Consumer Financial Protection Bureau, which is the executive branch that, regulates financial instruments. There are a few of them, but that was the big one. And we're just saying, please just tell us how you're going to treat this stuff so that we can comply with that. Um, and then while we were in Washington, one of those times, I got an email from the White House, and they're like, "Hey, we heard about the stuff that you guys are doing. It seems really interesting from so and so congressman. If you're still in town, can you swing by and like break this down for the White House?" So we're like, yeah, of course. Um, so I went and like when you meet someone at that level of government, at least, it's not like you go in and meet the president and like explain stuff to him. You meet with a room full of his staffers. And I'm not well versed enough in politics. I have no idea who any of these people are.
right.
Even if it was like anybody other than like this is the Secretary of State, I don't know who they are. I know who like three people are. Um, and my lobbyists were saying like, "Oh, these are really important people to me," but I'm like, "Yeah, it's your incentives are so misaligned that you want to tell me that the time we're spending here is well spent, whatever." Um, and so we explained everything to the folks in the White House, and then we went home, and I didn't think we would hear anything. I mean, we didn't know what was going to happen. Literally, like 3 days later, Betsy DeVos, who is the Secretary of Education, got up in her big like annual speech and basically said, "Hey, we heard about these things called income share agreements, and we think that we should replace a significant amount of the student lending, like the entire ecosystem. We should like wholesale replace it with income share agreements. It seems like in many ways, for many people, they're a better option. That makes it so that if people aren't successful, they don't pay anything." And all hell broke loose. Like, I mean, I didn't realize at the time that like as soon as anything adjacent to Trump came out in favor of anything that you were doing, you're going to be public enemy number something. I mean, there's a lot of, anything that Trump touches becomes immediately tainted.
Mm,
Especially with the Warren camp that ran the CFPB.
mm,
All this is like I didn't know or care who any of these people were. I thought if we're trying to do a good thing and trying to help people that they would, work with us. Um, but yeah, from that day, it was uh, I didn't realize at the time, but I don't know if there is a way we could have recovered from that.
mm,
Because then regulatory inquiries start. And they very intentionally create the regulatory inquiries in such a way that you have to go tell all of the capital providers and all of your partners and all of your students that all of this is happening. And they halfway kill the business with
mm,
that. Um, and then they kind of went away for several years.
mm,
And then right before Biden's term was about to be done, um, they they had a hunch that because they're an executive branch. Trump was like, "Hey, if I win, I'm gonna shut down all these, I'm gonna shut down the CFPB," and he said that in particular.
Right.
So they were like, "Hey, we need to clean all this up. We're gonna
Right.
every company that had touched an ISA, they bankrupted in the course of about a year.
Oh wow.
I think we're probably the only company that touched an ISA that didn't go out of business, and only barely. We spent millions of dollars in legal fees trying to come to an agreement. They threatened to they threatened to sue us. We said, "For what?" And they said, "It doesn't matter. We're gonna, you did something bad." We said, "What did we do that was wrong?" They're like, "We doesn't matter." Like there was no, um,
Right.
yeah, it was crazy. I became very black pilled um, through that. Um, and the bigger thing was, so I was like, okay, I'll just like bankrupt the company. This isn't worth it. Like all of our students have already graduated at this point. Um, I'll just be done. And they're like, okay, well, we're actually going to name you personally in the lawsuit. So for the times that you were acting for the company, but not in your role as CEO, I was like, what is that? Like when, how are you piercing the corporate veil? Like this doesn't make any sense. And they're like, "It doesn't matter. Like, we're naming you in the lawsuit,"
Hmm.
which means, like, I can take them to court and fight. It'll be several $1,000,000 to fight. The company didn't have several $1,000,000, so it's gonna be me personally. So it's either it was very literally, you settle with them in some way or my family goes bankrupt. Like, we lose our house,
Right.
and they were not shy about that. They're like, "Yeah, you should, like, you know, when we're trying to figure out how to pay the fines that they want. Originally, they asked for like a $23 million fine or something insane.
Mm.
Eventually, we paid them a
They
60.
probably read that $130 million funding press
It's
release.
it was very literally what happened. They're like,
Yeah.
we know that you have like $50 million. We can see that you raised it in 2020, and by this time it was like 2023. Like you realize, like we use that for operating. We don't like the people who we're talking to very clearly thought that when you raise money, it, like, just goes into my bank account or something and just sits there.
Mm.
Um, anyway, um, yeah, so we paid a $65,000 fine and it went away, but it killed. I don't think anybody will be able to do anything with ISAs probably ever again.
Wow. And did the current government come in and change that or like get rid of uh
I mean, they killed the CFPB doesn't really exist anymore.
right.
It's at for us, it's at a frustrating place where, like, if it actually existed, so the CFPB actually owes us some stuff. So as an example, in the agreement that they sent over a 35-page agreement and they said, sign this in 24 hours or we're filing a lawsuit.
Mm.
If they file a lawsuit, we had a debt covenant that would immediately cause bankruptcy in the company,
Mm.
but they were naming me in the lawsuit. So it was like, sign this in 24 hours or my family goes bankrupt. Quite literally, that's how it shook out.
Mm.
And a lot of it didn't make sense. Like we had to
But you couldn't negotiate because
no,
there's no time,
no,
right?
which is like totally not something they should do.
Right.
And our, lawyers every lawyer that I'd like share this with, who's come within a mile of them, like they didn't do that, did they? I'm like, no. Like, well, what happened when you requested your meeting with the head of the CFPB? Like they have to, like it's in their bylaws that they have to let you do that. It's like we did it, and they said no. They're like, yeah. It was all out of like the norms, of, like they weren't acting even according to what they're supposed to do internally. I'm not bitter, a little bitter. Um, yeah, so, we paid a small fine, we agreed to a bunch of stuff that's blatantly not true, and at the end, at the bottom, it says, they don't necessarily agree with all of this, but that's not what their press release says,
Mm.
is like, we acknowledge that we never paid our instructors, which doesn't make any sense whatsoever.
Mm.
We paid tens of millions of dollars to our instructors. I wish that we didn't have to pay our instructors. Um, and that we would never use an ISA ever again, which I was already at that point, I would, was beyond done with ISAs anyways. Um, and the thing that they added at the last minute, um, was that we would go to all of our students who were on an ISA that hadn't finished repaying and give them the CFPB approved version of an ISA. And we agreed to that. And then we, the next day we're like, okay, can you give us the CFPB approved version of an ISA that you demand that we use? And they're like, oh, shoot. Like they clearly, they didn't realize that putting that in there would make them tell us what the right thing to do is. Before they could just hide behind,
Mm,
you know, we're not going to tell you what you're doing wrong, but you're doing it wrong. And they can do that so long as they don't have to tell you what the right thing is. So we still we don't have that still, um,
mm.
which is a serious violation of the agreement by the CFPB.
But the organization doesn't exist.
It does technically.
Right.
Um, yeah, I still have reporting obligations to them. So
Oh,
I
interesting.
send uh I send a report to an email that bounces, that literally bounces. Um and on our side of the agreement, if we were going to break the agreement, it was like a $5 million fine.
Oh, wow.
And they've totally broken their end of the agreement, and I don't know. I can sue them and I'd win, but then it's another $1 million in legal fees, So
Right.
yeah,
This is
it's weird.
and then now we're in that part of the story where, ISAs, which was clearly like this, I guess, um breakout model on your part and creating a financial product around it. Now, midway in the company's journey, there's regulatory challenges that come up,
Yeah. Oh, we were out of money at this point.
and you're out
Literally,
of money at this point.
I put my life savings in
But
the
like
company.
that was that happening due to other reasons, or was it like
Well, so when it became clear that we were never going to be able to use an ISA,
right?
we had to move all of our students away from ISAs.
That was before they even left you alone?
Yeah.
Yeah, okay. Yeah, so you started migrating
So like,
stuff and
okay, clearly this
yeah,
isn't like a path
right,
forward that we're
right,
gonna, you know, get regulatory clarity on. It's gonna be like
right,
rubber stamped.
right.
So let's move away from ISAs. We had to move to loans,
Mm,
which just didn't make any sense for a lot of reasons.
right.
Um, so we still had like some students that were enrolling over time, but it was not good. Um, so our revenue was like dwindling. And we'd never since we hadn't turned a profit in years.
Mm,
We were burning huge amounts of money for a lot of the company's timeline. Um, so eventually I was like, look, I don't know how to make this work. We have to turn off enrollment.
mm,
So by the time we like signed stuff with the CFPB, we hadn't enrolled a student in like 6 months. So we were basically just collecting money from a few residual ISAs and spending money, like honoring our obligation to teach out the students. But yeah, like we had $0 in the bank. I I put in my entire life savings, everything that I'd made anywhere. I borrowed $250,000 from friends and family and put that in. Um, and we were teaching people to we had our only revenue that we had coming in was we would teach, we had a course that would teach engineers to use AI. And so basically I would just look, every month I would say how much revenue do I need to generate with this? It's like, hey, $200,000. Okay, I'll go sell enough seats to generate 200,000 revenue this month. And that was my life for like over a year.
oh,
Just
wow.
fighting to yeah, we had less than a month of runway in the bank for about 18 months straight.
Oh my god.
Um, it was a little stressful.
It's insanely stressful.
Yeah, it was a lot. Um,
And so now we're in this, like, I guess, third phase of the company.
yeah, so I
Walk
mean
us through
we
that.
started teaching this AI course, and companies loved we were probably the first company to figure out how to actually use AI for hardcore engineering really well. Um, because as we were in this downturn, started asking all of our hiring partners, like, "Okay, what can we do that's valuable for you? Because we're not training junior engineers anymore." At the same time, junior engineering hiring was a lot lower than it had been in the past. So every code bootcamp is just going under right and left. The entire space is hammered. Um, and companies would tell us, "Hey, we want to know how to use AI," and we'd be like, "Okay, what part of it?" And like, we don't know, and we don't know what that means. Just like go see if there's anything there.
Mm.
So we literally like sent out a research team to just go. We talked to
So this is a request for like request for
yeah,
basically
yeah,
a program.
yeah.
Yeah.
They all wanted to know how to use AI,
Right.
but they didn't know what that meant. Um, so our first job was basically figure out what's really working well in AI anywhere. And so we talked to hundreds of companies. Every company's like, "Oh, we're using AI." This is like after GPT 2.5 came out. "We're using AI here, we're using AI there." And we'd be like, "Yeah, can you show us?" And like, "Well, theoretically, we're going to use it there. We're not there yet." Um, but across the hundreds of companies we talked to, there were like two that were actually using AI. Um, Arguably three or four. So we like took the pieces from them, reverse engineered it, turned it into a curriculum, and started teaching engineers that. So at the time, to get value out of AI, to make it more than like a fancy autocomplete, you basically had to go build a smaller version of what's now Cursor or Claude Code. You had to like have, train the AI a little bit on the way your code base worked, and had to build a bunch of data piping. It was it was a big complex thing to make AI work. Um, but we were doing it and we were on the cutting edge of it. So companies started sending, um, like one of our earliest cohorts, we had a company be like, "All right, I'm sending you 100 engineers." Um, and that saved the company.
Mhm.
Um, and so we're, kept doing that, kept working with those companies. And one of the companies who's one of the bigger customers, was like, "Okay, look, this is awesome. We they measure everything meticulously. They're like, look at our like net output per engineer has doubled in the last quarter. And we didn't like that's crazy. They're spending hundreds of millions of dollars on engineers. So for that to just double over the course of 3 months, what their net output was, they none of us could believe it. Obviously, it wasn't all us. It was just AI, and we figured out how to help them use AI. Um, and so they're like, we want something a lot more immersive, a lot more intensive. We want people who are like purely focused on AI for like 1,000 hours. And we just threw out that number. So what would it cost for, and you guys are doing a really good job of doing it. What if we flew a bunch of people into Austin? We put them up in housing. We fed them. We did all, these events. Could you guys build a program that would take them in 1,000 hours from, have never really touched AI to being like best in the world at using AI for engineering. And we'll just pay you per graduate, and we'll guarantee to hire everybody on the other side
Mhm.
because we don't have enough people internally that will do this. But we'll pay you per student basically. And if you want to go do that, then we would love to do it. Um, yeah, I was looking at it the other day. We had like less than $10,000 in the bank, and they're talking about a multi-million-dollar thing.
Mm.
So yeah, packed up my family. We moved to Austin. We ran the first cohort without knowing how it was gonna shape up. Um, and we parlayed that into it being like a thing for other companies to participate in, and the Gauntlet AI model that we have today. And that first year we did more than 15 million in revenue.
Oh, wow.
Yeah,
And this is
from
like
a
the
cold start.
corporate sponsored model and uh,
It
yeah,
changed a little
right,
bit. We made it so that, we're covering all of the costs, and then companies pay, a recruiting fee, and
right.
they have to pay it in advance, so that we can fund ourselves. But yeah, it was just, "Hey, we're gonna go find the smartest people on the planet, train them in AI, and let you hire them. If you want to hire them, then you can, pay us and come meet them." And that worked beautifully. Yeah.
this is, it's been a long journey, and I'm a huge believer in compounding, and I think like throughout, whether it was starting in growth and marketing and engineering and learning to build a Twitter audience, selling, like there's some threads that keep tying throughout, your journey.
Yeah.
And then, selling a book, then making a course out of it, and then you realized, oh, you can make a company out of it, and then
Mhm.
figure out a business model around it. Um, and for all sorts of reasons, the company doesn't work, but then, you find yourself in this new.
Yeah, it's funny. I mean,
But the relationships have compounded, right? Like you mentioned, you already had the hiring partners from Lambda, right? Like
yeah.
you already had those hiring partners for a different product, and now as you're thinking of uh, y- is there a next chapter for the business? Is it something you can do for them? Through those conversations, this new idea emerges that, oh, here's a need in the
Yeah.
market.
Well, I mean, so there are a couple things that are true that, um, so the first is like Gauntlet as it's operating today wasn't really my idea. It was honestly our hiring partner's
Right,
idea. Um, and they've been very gracious to us and backed us, and they remain a hiring partner to this day. They hire at least 15 people per cohort, even as
right,
we run 4 or 5 cohorts a year. So it's a multi-million-dollar per year
right,
contract still with that original company.
right.
Um,
So it emerged as a market need,
yeah,
right?
yeah. But they like all of the ideas for how Gauntlet should run. In the first cohort, it was just for them, and they were paying us per graduate. And I was like, "Look, this is awesome, but if you're going to be the only company on the other side, it's really hard for me to make this business work,
Right,
um, because you can only hire so many people." And then at the time, like we were we would bring somebody in, like, off the street, company, and just, like, have them walk through. But we started getting random people showing up at the office being like, "I've heard about this Gauntlet thing.
mm,
Can I just come look?" Um, and literally every single person that walked through the building was like, "How can I hire these people?" Like,
right.
I mean, I'm a little bit sad we didn't get a chance to walk through the office, but I think we joked about how, the average person that walked through the office door became $100,000 contract. Like,
Oh,
it was that extreme. Um, so I was like, okay, this first sponsoring company, um, how can we like work with you? Because you guys covered all the costs. Like you're doing this for you. Is there any way that we can let other companies hire a few people, just so that like that starts going and this doesn't just become a one company thing? And they didn't have to do that. They could have said, "No, we funded this whole thing. What are you talking about?" And they very graciously were like, "Yeah, take like 10 people. We have to be able to say, you know, there can be people that we give you the authorization that you can go get them hired. So they're people that we don't, they're not the top 10 people in the cohort. Um, but yeah, you can go let other companies hire them so long as they pay at least X and they do it in these ways." So our like literally our entire business model was okay, I guess we have to do it that way.
yeah,
And that's still the way it works now, except now you have to prepay. Um, but yeah, I think almost every single one of those companies that hired somebody came back and prepaid to hire at least 3 people for the next cohort. So that was we were cash flowing from that point on.
wow.
And yeah, I've been cash flowing ever since, which is new for me. Uh, Way better than going to Wall Street and trying to pre-sell your future revenue.
Right.
Just
These
to
financial models and
oh,
yeah.
so every day I wake up and I am just so grateful that I don't have to charge students any money ever again. And
Or have to go to Wall Street to
yeah, those 2
yeah.
things were the absolute worst. And the worst part of ISAs was the minute a student gets hired, you've already performed all your services, you spent all your money, they get hired, and now now they're mad at you because they have to, like, turn around and start paying you.
Mm.
With the model we have now, students never pay us anything no
There's
matter
a lot
what.
of goodwill that builds up, and
Yeah,
yeah,
it's just so and, like, even if they're grateful, I don't have to be like, "Hey,
I know. Yeah,
you can repay some of that."
yeah.
I'm sure people would. And contractually, I don't have to like try to say, "Okay, here are the circumstances in which you do pay me and the circumstances in which you don't." We there's some people that come to Gauntlet and they train and we put them up in housing. And then at the end, they're like, yeah, I decided I don't want a job. And like, okay, was that the way you were the whole time? But
Mm,
whatever. I'd rather have that happen than have to like chase people
right.
or, try to convince you that these terms of this contract do make sense because so it's just easier to let it go.
Well, congrats on, being cash flow positive and for I guess it's a long journey for being on this new journey now.
Yeah.
Yeah.
Yeah. No, and as we were talking about at breakfast this morning, like I couldn't have done what we do today without doing what we did then. Um, for a number of reasons. First is we didn't have the trust of,
Yeah.
hiring partners that like it was for the first company that started working with us, they estimated it would be north of a $20 million outlay of cash to run the first cohort.
Mm,
Because they're not only, paying us, they're also hiring. They hired more than 100 people out of that, all at $200,000 a year or more.
right.
So it was a big, big investment from them.
Right.
And they only did that because they'd been working with us for a long time and trusted us. And
Right.
it's been a great relationship. Um, so yeah, I don't think I couldn't have done that on day one, you
Of
know.
course. Yeah.
And then everything about the way that we built Gauntlet was 10 times easier because we knew exactly which pitfalls to avoid.
Mm,
We knew exactly what was going to cause a problem, knew exactly how to, work our way around that. And running Gauntlet has been honestly easy. I hesitate to
yeah.
say that
I
word,
know.
but like
You know,
it's all relative. But
talking about these hindsight situations is um it, I guess easy in theory, but um practically, like, the situation is just so different when
yeah, I mean,
every different, like, instance you look back, like, the situation is different.
yeah, we,
Yeah.
we we made all the mistakes that
Yeah.
you can make. I'm sure we'll make more in the
Yeah.
future, but when you can avoid the vast majority of the sand traps, it makes life a lot easier.
Yeah. Well, so what's the state of education?
Be more specific. What
Like,
aspect of
uh,
it?
I mean, I think it's been, I'm in the camp that thinks that, it's been like how we learn has been sort of l- it got lost along the way, and the modern educational institutes were built for the industrial era, and the incentives don't quite work out anymore, and I think AI might have accelerated that realization,
Mhm,
and that's going to change a lot of things. Well, and so in and then these institutions have been around for centuries, so it's not going to go away overnight,
mhm,
but maybe in the next couple of decades, right? A couple of decades is like a realistic timeline to see, well, when people get, you know, uh, let's say, turn 30 or in their late 20s, when they start thinking about like, so the ways to currently, you know, diversify your career options is you go build a network through an MBA program. And I think it's less so about the education, more so about the network, at
mhm,
least at the elite colleges. Or you have some technical itch to scratch, and you want to scratch that through a master's or a PhD program, which is self-paced in many ways. Most of the
mhm,
students I've talked to, it's a self-paced thing. It's the lab resources,
mhm.
and it's camaraderie, and like, eh, getting people, or like, getting a cohort to work with, I guess.
Yeah.
That's what it is.
Well, I mean, let's start even earlier,
Yeah.
right? Like my kids go to Alpha School.
Oh, cool.
I don't know
Okay.
if you've heard of
Yeah, 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 I
Alpha
know.
School.
I know Alpha School.
But yeah, they don't have teachers. AI is their um all their academic coursework is done with AI.
Mm.
I get enough data. They've been there for more than a year now, so I can see the data of where they started and where they are now. I mean, it's a very different experience for my daughter who's older and my son who's younger. And I have two that aren't old enough to go to Alpha yet. Um, but for my daughter, we'd moved around so much, and she was kind of a guinea pig in a bunch of different school systems for me. But she had some pretty big like gaps in basic foundational knowledge that we had no idea about. And she did a couple years of public school before we came out here and started doing alpha, um, within a few days, the AI had identified what those gaps were. All of her lessons were around filling those gaps. She, solved them and moved on. And she's, above grade level in everything now, but not by a lot. She like arguably was pretty far behind what her grade level would have been. Which my bad. Because it's not her fault. It's totally mine and my wife's fault for trying different models and just, there are gaps that got left. Um, and my son, on the other hand, he came in roughly at grade level, and he would be in third grade, going into third grade this coming year, and he's in like sixth grade math, and you know, I I can't even imagine what he would be doing in a public school now.
Mm.
So yeah, I mean, it starts there, and then in the higher ed world, so we're running a cohort this summer for students from MIT and Stanford, and UT Austin out here. Um, that's basically a mini gauntlet just for them. And we've got more than 100 people planning on coming, and it's really to like catch the gaps that they're they have at Stanford and MIT.
Yeah.
Which you wouldn't think would be possible. You think that Stanford and MIT would have all that stuff covered. But they're just it's just different. They do a good job of the fundamentals. Like I'll give them that. Um, but they have some pretty serious
It's the
gaps.
same dilemma as corporates have. They're just too
100%.
big.
Yeah,
Yeah.
yeah. It's a
It's
big ship to turn,
right.
and the accreditation process.
It's the same innovation dilemma
Yeah,
that every
exactly.
large organism has.
Yeah,
Yeah.
I mean, we have to like every single gauntlet cohort, which now we do for what we call gauntlet primes, the normal, bring people in from the outside, train them and place them in companies. We run four of those a year. And then a bunch of corporate training, both, people fly their engineers into Austin, we train their engineers, or, we go out to companies and train their team. Every single cohort, we have to rewrite 100% of the curriculum because even in the couple months that it's been since the last, it all changes. And obviously we have AI that does all that now, so it's not, it's not a big deal. Um, but I think that only accelerates. I don't think we ever go back to a world where, for the vast majority of technical AI related things, it makes any sense to have a 2-year long accreditation curriculum review like that. Can you even
Yeah.
imagine what 2 years ago looks like in tech now? Like,
These
so out of
yeah.
date.
These like timelines make no sense at all.
Yeah.
These should be individual specific.
Yes.
And they should be like interest driven, they should be curiosity driven, every project driven. Different projects have different timelines. Like
Well, I
maybe
mean,
you're
the amount of data that I have on every student is wild, and the ability to feed that data to AI and have it create custom curriculum, custom lesson, custom adjustments is, I mean, I used to have a full-time 25-person curriculum development team, and they couldn't create 1/100th of the curriculum we create today
wow.
with
Right.
no full-time people.
Right. Interesting.
Arguably one full-time person who's
Who has to feed it?
an
Like
engineer who's, yeah, taking all the data and feeding it into the
right.
AI.
And making sure it
Um,
doesn't hallucinate.
yeah, and I mean, has all the curriculum development and learning skills that we and, all the research. And, I think what is gonna be a big thing moving forward in AI is we find that it's extremely important for all of our students and everything to like the AI model is always going to default to the generic consensus view of anything. Um, and anytime the default consensus view of something is not correct, it's extremely important to be able to override that with whether it's your belief system or your understanding that doesn't comport to the norm.
What's an example?
Um, an example, I'll give you one from, my kid's alpha. Like, if you were to ask AI what's the value of standardized tests, what it's going to say is standardized tests are worthless and they are biased and they don't give you
Depending
anything.
on which model's responding.
Yeah. Um, but I think standardized tests are extremely important and they can benchmark you. And, it's like if I'm designing curriculum for my kids, standardized tests, and the Alpha practices the same thing, which is one of the reasons I was so happy to send my kids there. Like they take standardized tests several times per year. Um, they the curriculum still follows the Common Core, and it's really important to me to be able to benchmark them against where they would be if they went to public school, or to know if there anything that they would be learning in public school that they're not, or where they are versus the rest of the country, which loses its validity pretty quickly because the median in the country is really bad. Like, they've got to be 98th, 99th percentile. Like that's I feel like if my kids are 98th percentile, then I'm like, okay, they're on the right track. Um,
But what are they getting tested for?
so they literally use the NWEA map tests that it's all the common core the same thing that you would use in any public school to try to gauge where a student is. Um, yeah.
Okay, I have a disagreement there for standardized testing.
Okay.
E- Every human being has varying levels of potential,
Hmm.
and they're not they're suited to thriving in their own unique environments.
Sure.
Like these standardized tests are supposed to test them across a single benchmark,
Hmm.
which they might not be suited for, or they might not be able to optimize for. And so if they're not 99th percentile on that one metric, that in no way means that they're not extraordinary or in a league of their own in some other thing that there is no there's no way to test for
Yeah.
until they perform at life.
I get the point that you're making, but
I have a personal bias because I do horribly at tests, and like by the way, most of the most brilliant people I know probably do horribly at tests.
yeah. But like when if you're talking like college stuff, I can agree with more of that. If you're like, my daughter's in fourth grade and her tests are like, can you multiply? I want to know if she can multiply or not.
Right,
And regardless of what AI and technology is going to look like in the future,
right.
like there is a base foundation layer of knowledge that you have to have in order
Okay,
to
no,
build off it
of
and do other
course,
stuff.
yeah, yeah, yeah.
Yeah.
Okay, no, I was thinking college tests. Okay, no, yeah,
Yeah.
that makes sense.
Yeah.
Okay, yeah,
Well, college tests, I wish that we had kept the SAT from 15 years ago around before they tried to kill it. But anyway, that's another
separate
topic.
debate.
Yeah. Yeah.
uh, okay, interesting. So AI is coming.
AI is here.
AI is here for education, and where that's middle school, kindergarten, high school level, or higher ed. Like these institutions are going to just fundamentally change
Mhm.
how kids are learning, how teenagers are throughout. Like I think the life cycle,
Yes.
the learning life cycle is going to change.
Yes.
Yeah. How much is self-paced learning going to, or home-based schooling, or at some point going to just like become like cohorts are important. I don't think that's going to become a huge part, but like maybe like another variation of the model is that that community that you need is like within neighborhoods, and that becomes localized in some way,
Yeah. I mean, so
and there are all these like distributed.
yeah, so I think that's, again, I'll go back to like K-12. Alpha in downtown Austin costs $40,000 per kid per year,
Yeah,
right? So
yeah.
the outcomes are phenomenal. The most common criticism, which is, oh, that's great, but it's a super expensive school. You can say, well, yeah, but you should compare it against the other super expensive schools. Obviously, there's correlation of wealth and it's a different cohort. Um, but what's going to be really interesting to see is now that Texas passed the TIFA law, the Texas Education Freedom Act,
Mm,
kids who come from families that make less than $65,000 a year now get a $10,500 per year voucher to use wherever they like. And Alpha built out a couple of schools that use literally the same curriculum and education model that my kids use. So one is uh, called Texas Sports Academy. It's literally the exact same education software that does all of the academic teaching that my kids are paying $40,000 for. There's going to be thousands of kids that get that for free starting next year.
Oh,
Um, and I'm really, really excited to see what that does because
is
in
is
the
it the new school they created, Texas Sports Academy?
Mhm.
Oh,
Yeah, Texas
is
Sports.
it like geared towards sports?
So the fundamental model of Alpha is you can do all of your academics in 2 hours a day if you use personalized AI tutoring, basically. And so they built that as a software platform. And then the question is, what do you do with the rest of the day? Um, and so my kids are actually switching over to a school that's closer to us. It's still an alpha school called Waypoint. But it's still the 2 hours a day with the same alpha education model. But Waypoint is based at like an outdoor center, and then they spend the rest of the day fishing and hunting and playing around
Mm,
outside, which is really important to my wife. Um, it's important to me too, but it's
mhm,
very important to my wife. So I'll still get the same educational outcomes. Then you can do whatever you want with the rest of the day. You get your time back.
mm,
Um, and they have different versions of the school where you spend 2 hours a day doing all of your academics, and then what do you do with the rest of it? There is Texas Sports Academy, where the answer is you go get together with people nearby and play sports.
mm.
And that's probably their fastest. I think that'll be bigger than Alpha by
Oh,
10x
oh
because
yeah,
that's what people, and especially in Texas, people love that.
yeah.
Then they have GT
Not just
School.
Texas. I think that's going to be successful across the country in many
I
places.
think so too.
Yeah.
Um, and they're going to have elite athletes as part of that.
Yep.
It's not only going to be for elite athletes, but
Yeah.
if you um
That's a byproduct.
yeah, and then they have GT School, which is gifted and talented school, and that's for the people that say, hey, I want my kids to do 2 hours a day of academics, and then with the rest of the day, more academics. Um, and so all the Asian parents, it's a little bit of a generalization, but not quite. But all the people who love academics for
Yeah.
academics' sake,
Yep.
there's that option too, and they're going to be not 99th percentile, but 99.999th percentile in everything.
Right. I think I agree with your wife on like the outdoors part
Yeah,
is in some ways probably increasingly more critical.
yeah,
Yeah.
yeah. I mean, and it's not to say that any model is right or like
It's whatever suits you.
you can still go outside, even if you don't go to the go outside school.
No, it's just that
Um,
you would have to manage it.
yeah, yeah.
It's outsourcing.
But no, I think the education model that makes sense is extremely personalized. It's not self-guided
Yeah.
necessarily. Um I think
Somebody has to curate it, but
yeah,
yeah.
I think you still want to like there are kind of new age schools that are like, yeah, you should let your kids
You want
study
masters, you want
whatever.
direction,
Yeah,
right?
exactly. Yeah. Um but yeah, like the pacing should be custom. The approach can be as customized as possible. I mean, in Alpha they even have like the reading apps will let my son plug in that he likes Minecraft and here are the names of all my friends
Mm,
and we like being in the mountains, and it will create reading that's to his level, that's a story that involves all of his friends in Minecraft, and he devours that stuff.
mm,
Um Obviously he reads normal books too, but um yeah, there's all sorts of opportunities for deep personalization that didn't exist before. We do some of that at Gauntlet's a little less relevant than like, trying to teach somebody multiplication. Um, yeah, I think AI fundamentally everything goes to instead of a many to one or one to many type of model,
right.
it becomes a one to a lot of AIs model, and it's going to be way better than the traditional classroom for sure.
Mm.
I think we'll get to the point in the next decade where the most expensive private schools have to move away from a traditional lecture based environment if they want to keep up.
Yeah, I'm not confident they'll be able to move fast enough, adapt fast enough, and even if they do,
I don't think they
there's
will.
yeah, there's
I mean,
there's this incumbency
they
disadvantage.
might just get eaten alive.
Yeah,
Which, heaven knows that companies will die faster than they will evolve oftentimes. Um,
I asked Friedberg about like where he sees the future of education will be, and he said like maybe on a higher ed level, you would see companies acting as institutions more and more,
mhm.
and they will like come up with all these program offerings, and there's no way why like some of these companies in the future are not university alternatives.
So I think he's not well, I think he's wrong, but I think he's not 100% wrong. I think he's right that companies will get more involved in education. I mean, they can already clearly see that if they want people to understand X, they can't just close their eyes and rely on the university system to provide X. But what I think he's probably wrong in that all the companies are going to start their own
No, not
schools,
all.
or that even
Some are going to emerge. This like
I think they're going to partner with people who are really good at building schools.
I think majority are going to partner, but I think like you would see some emerge like in a way that SpaceX acted as a university for a certain kind of talent, and
Yeah,
in the same way Palantir acted as a training ground for certain kind of talent, and there's
I mean, a couple companies
and that
like
talent gets priced, right? Talent gets priced in
yeah,
recruiting. That talent gets priced in venture,
I think Palantir and Shopify might do something. But outside of that, I mean, we've partnered with a lot of the other
right?
companies, and they're just so far away from actually being able to build an
Yeah,
effective education
right.
institution.
But no, no, not everyone's gonna do it. Just like companies are gonna be
Yeah,
further ahead. Like we're on the edge. They're probably gonna try to do
yeah. I
something
mean, I'm a
like
little
that.
bit biased, but what they should
Yeah.
do is come to us and have us build it for them.
Oh,
Because that's all, we're I guarantee you. I mean, that's the reason we partner with companies, right?
yeah.
Like every company recognizes that there are talent gaps and,
No.
they have trouble with visibility into finding this specific thing.
Right.
Um, Even the first company that we partnered with, they could have totally built that internally.
Mm,
But they're like, yeah, you guys, like, all you think about all day is how to build the right class. Like, go do it for us and we'll pay you.
yeah.
So I think that'll happen. In fact, I mean, we have got, we're coming up on 100 different hiring partners that are working with us on making sure our
Mm.
curriculum's right and hiring through us. I would argue that we're the small scale version of that for AI right now.
Well, TBD. Maybe next time we talk, we're like
Yeah.
further along on this journey, and
Yeah. We'll see.
we'll see
See.
where it goes. So we'll do a quick rapid fire to wrap it up. What's your favorite book of all time?
Oh. It's toss up between Les Miserables and Blood Meridian by Cormac McCarthy.
Wait, what are they about?
Les Miserables is by Victor Hugo. It's about a convict named Jean Valjean who goes to jail because he stole a loaf of bread, and then when he gets out of jail, he changes his identity and runs away and creates a whole other life. And
Mm,
um, the people in the shadows are still trying to conquer him. My favorite part of that is like there's in the first, and it's a giant. It's one of the best books of all time, but um, he runs away from the chain gang and um, he kind of changes his identity and he comes across a bishop and I'm not gonna get into the whole story. It's people probably have seen it, but it's just very, very well written. I'm a big Victor Hugo fan. Um, and then Cormac McCarthy, his writing is just, I mean, it's very like, so he wrote No Country for Old Men and The Road. My favorite's Blood Meridian, which is about kind of the frontier in the U.S. when it was kind of a battleground between the U.S. and Mexico and Native Americans before they were called Native Americans, obviously. But just the gruesome reality. He's just such a good writer. The
mm,
way he paints a picture, every single word is like so well done. and the way he portrays thoughts is just incredible writing. Um, and the way he makes you feel like you're in that environment. I really like very I like books and movies that make me feel something different than just normal life. So like my favorite movies are like Mad Max or Fight Club or like
Mm.
something that gets you into like a
A different universe.
dark dystopian, like yeah, lets you appreciate how
Life.
what your normal life
Yeah.
is like a little bit. Blood Meridian is very much that way, where you can imagine what it would be like to be trekking across the American West as a nobody vagabond who grouped up with a bunch of random people, and you haven't found water in 2 days. You're getting attacked. It's just really good writing.
Favorite TV show?
Uh, Breaking Bad. Um, what else? All my TV shows are like I don't have enough time to watch TV that I something has to be like extreme, like you hear about it constantly for me
Yeah.
to try watching it. But I don't want to be like I like Game of Thrones. Succession. But those are really
Those are good shows.
they're all good.
Favorite cuisine?
My guilty pleasure is pizza. I should eat less of that. And steak. I really like steak.
Oh, Austin has some great steak. So great move.
A lot of great
Great
steak.
move for steak.
Yeah, yeah.
Favorite restaurant in Austin? We'll wrap with that.
The Well on 2nd Street.
The Well on 2nd Street. Okay, well, that's where maybe people will catch you.
Yeah, I have.
Oh.
There is a non-zero chance that if you walk into the Well at a certain time of day, I am there.
Austin, thanks so much for coming on the show. It's been a pleasure, jamming and talking about education and distribution. And yeah, can't wait to see where Gauntlet goes over the next few years.
Awesome. Thank you. Thanks for having me.